The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 28th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential, well, that's something we must master each and every day. So let's begin with a few empowering beliefs. The first one brought to us by one of my favorites, John M. Templeton. Goes like this: those who seldom make mistakes seldom make discoveries. How true is that, folks? You need Claude Gibb. I found this one. I like this one. Progress is made by correcting the mistakes resulting from the making of progress out here. Hey, let's look at it like this. Our mistakes won't be irreparable damage to our lives unless we let them become that. True story. Listen to this. True story. Persian rug artists stand before the rug while a group of boys stand behind it to pull the thread after the artist starts it. Now, if one of the boys makes a mistake, the artist adjusts the pattern accordingly so when the rug is finished, no one can tell where the mistake was made. This same kind of adjustment, folks, that can take place in our lives if we will let go of that mental thread of each mistake and let the universe weave it into the success that you are. Always remember, sorrow looks back, worry looks around, but faith, folks, faith is always looking up. Life is looking up. The question for each of us is not what would we do if we had the means, the time, the influence, and the educational advantages. The question is, what will we do with the things that we have? Why? Because you do have an amazing power within yourself. Let's go check out the amazing power of the markets here. Right now, the Dow is up 15 points, trading out at 14,791. S&P is up 1 at 1631. NASDAQ up 6 at 35.84. Russell 2000 up 1.5 at 1014. The New York Stock Exchange is flat, down 86 cents. Not a big deal out here. Gold right now, gold is off about 50 cents, so that's flat at $14.19. Silver off 23 pennies at $24.42. Light sweet crude up $1 at $109.96. Over in Europe right now, we take a quick peek here at the DAX. The DAX is off 111 points. The FTSE only off 29 right now. We'll go take a look at those charts as well. See what's going on. We're going to first start off by taking a look at the SPY. Let's start off inside the ETF structure out here. So as we take a look at the SPY out here trading out at 163.47. The B point of an A to B equals CD down. That is the August 21st swing point. So A point, nice big move, by the way. You're taking a look at the move off of the August 5th high, 170.96. Your B point out here is August 21st, just a few trading sessions ago. And that was at a level of 164.19. 159 million shares at that B point. Well, guess what? We did 159 million shares yesterday. So you did equal to the volume. It didn't cross it on light volume. It crossed it on similar volume. That sets up a confirmed A to B equals CD down. That A to B equals CD down, 1-to-1 would take you to 160.51. Is that where it'll stop? No. 1-to-1, 0.272, 158.69. That's a possibility, but really at 158.69, that means that what you would see is a test of June 24th, a test of the June 24th high, at least at 158.43. So the range on the SPY is going to be somewhere between 155.73 to 158.43 at this moment, as we speak. Let's go take a look at the other ETFs, and we'll take a look at the indexes themselves. On the diamonds, the 1-to-1 A to B equals CD down takes you all the way back to the October 2007 breakout area. That number, 141.95. You'll see that the 1-to-1 A to B equals CD, that was confirmed with accelerating volume because passing the B point yesterday was with 11 million shares, and the B point only had 9.5. So you got a confirmed A to B equals CD down. That sets up a test of 142.52. 141.95, but I'm afraid that is likely not where price will stop. You're more likely looking at around 137.76, 140.42 out there as we speak at the moment. In fact, what it's probably likely to do, we can do this ahead of time. If we take that June 24th swing point, if we go from the low of June 24th all the way up to the high, what we're likely to see is a butterfly pattern that forms. In fact, it's a 1.272 butterfly that would go ahead and form at the top of that October 11, 2007 swing point. I'll draw that in. But as we take a look at this, I'm going to go ahead and widen this up on the screen. So for those of you that are following along on Tiger TV, you'll be able to watch me actually go ahead and create that pattern. And if you are just listening on your radio or your mobile device at tfnn.mobi, thank you so much for doing that. Remember, you can catch the live stream of this on channel live stream just simply by going to the homepage of TFNN.com, talk about multitasking, and go over on the right-hand side. You'll see the button with 3 little smartphone devices. Click on that. You can see this show streaming live, and you can catch the archive on channel 10. So what we're looking at here is a to B equals CD down with very little retracement. That little retracement says instead of the 1.272 butterfly, and you see all that I've done here, folks, I've taken key swing points. And the key swing points we're looking at June 24th. So I'm going to go from that high to, or I'm going to go from that low, I should say, to the high, to the swing point high on August 2nd. We're going to look at expansions. And the 2 expansions you want to be looking for are 1.272 and 1.618. Well, certainly at the 1.272, it completes an A to B equals CD down. I believe it's more likely the 1 to 1.618 A to B equals CD down, and that also happens to be a 1.618 expansion. So as we take a look at the 2 different butterfly patterns that could be setting up here in the Dow Diamonds, here's the first one. Here's the 1.272 butterfly pattern that would set up. And the second one is going to be drawn in at about the 138 to 137 level. I believe it is that one that will likely go ahead and complete in the marketplace, and it's probably sometime around the middle of September. We'll just simply call it September. Well, let's pick out a date. How about September 18th? The low of the market, September 18th. Write that down on your pad of paper, and I'll write it down on my pad of paper, and we'll see if that's the pattern. Now, the pattern that I'm suggesting is going to be about 138.33, and that is on the Dow Diamonds. Let's go to our first caller. Let's go to John in Sarasota. John, thanks for calling. Thanks for holding. How are you today?
Very good. Thank you, Steve. How about yourself?
Excellent. Excellent. Thanks so much. You got anything special planned for the upcoming holiday weekend?
No big deal, no.
Nope, just another day?
Well, it's a celebration, I suppose. It's the Labor Day, right?
Yeah, that's right.
Yeah, it is.
At least maybe, corn on the cob or something. A little barbecue.
Remember the big parade they used to have in Detroit?
Absolutely. Yes.
That was a big deal back then.
Yep, absolutely. I don't think they got that parade going on right now.
Yeah.
But hey, do you like corn on the cob?
I do.
Now, do you eat it off the of the cob, or do you slice it off?
No, I eat it off the cob.
You do, okay. So slather it with some butter and some salt on there.
Butter, yes. Salt, maybe.
Okay, yeah. I love corn on the cob. I hate when it kind of gets stuck inside the middle of some of your teeth out there. But man, it's I guess there's nothing really nutritious about it, but it sure is good. I suppose it's the butter and salt. I suppose you could say that about the butter and salt. But anyways, you called not to talk about corn on the cob. You called to take a look at the bonds out there. So you wanted to look at the TLT. Are you in that trade? Looking to get in that trade?
Looking to get in.
Okay, so as we take a look to get in on the TLT, we're taking a look at the 30-year Treasury. Now, the TLT is basically the 20-year Treasury out here, but we can use the 30-year Treasury as a guideline. So if you're looking to get in, right now we're seeing a bit of a pullback in bonds. If you had access to the 30-year, I would wait for a retracement down to about the 131.08 level, just a 0.618 retracement to see if, in fact, it can pull back that far. Now, I'm going to go ahead and pull up the TLT out here. And on the TLT, let's see if we can find the equivalent. Here we go. So as we take a look at the TLT, John, you're taking a look at coming off of the, I'd say, the low from August 21st all the way up to yesterday's high, and the 618 retracement on that would be 103.69. If it can pull back and it pulls back on light volume into that area, then maybe, you can say go ahead and fire away. I would also be trying to set up the short side of the trade out here. And I would think that the short side of the trade might have the better reward to risk out there. And the shorts, and here's the reason why. I'm going to switch back over to the 30-year Treasury for you as soon as I can find it on my screen here. There we go. And what the 30-year Treasury has done, which is kind of interesting, is if we take a look at this pattern going back to August 8th of 2011, it had been in a consolidation pattern ever since that time frame. And once you break a consolidation, once price breaks a consolidation, what happens is it will usually go back and determine and try to test and get back inside there. In the case of the 30-year Treasury, it did get back inside, but not with any conviction. In fact, the conviction was when it busted back to the downside on July 5th out there. Another time to eat some corn on the cob on July 4th. Price then moves back up into that area, tries to get back inside there, and rejects that. You then have another test, a third test, which got on August the 12th, which got right up to the top of that. So in the case of bonds, if you do take the long trade, you should be very careful as the 30-year Treasury gets back to the 135-ish level. Could be as high as 135. 24 out there, 130, maybe even 136. And if it can't bust through 136, that would really be setting up the short side of the trade. Now, what's probably cool about the TLT, or the 30-year bond, if we take a look at that retracement level that I gave you, if we take a look at the A to B equals C to up that it could form, you will see that if it pulls back into the 0.618 level, what it sets up is an A to B equals C to run that takes you right into that resistance of that longer-term consolidation pattern. So that's how I would trade it. That's what I would be looking for, and I would be ready to flip to the short side via the TBT once it gets in that 135-ish level.
Okay.
All righty?
Yes, thank you very much.
Hey, you bet. Thanks for calling, and have yourself a great holiday if we don't talk to you before then. Let's go to Rich in Orlando. Rich, thanks for calling. Thanks for holding. How are you today?
Good, Steve, and yourself?
Excellent, excellent. Thanks so much for asking.
And I like corn on the cob.
You like it on the cob too? Okay.
You got it.
Do you put salt on it like myself, or are you more like John and just mostly?
When I was younger, I loved the butter and the salt. But as you get older and you start trying to figure out what you should and shouldn't eat, I just like it nice fresh corn on the cob, and it's kind of sweet on its own.
Yeah, it's kind of cool. Now, did you grow up in the Midwest? Or are you from?
I did. I'm originally from Chicago. So yeah.
Okay, so it was right around this time of the year,
Yep.
when all the good corn picking. Now, what was interesting, because I grew up in Michigan, just as John did, and, back when I was a kid, all we had was that yellow corn.
Right.
Now they've got, you go to the store, you've got white corn, you got...
White corn, mixed corn, you got...
Mixed, yeah. And although I'll tell you, I like that, the bicolor corn, I guess they call it.
Mm-hmm.
But it's great. Like I say, I think it doesn't do much for us. Probably Nico and Paige would tell us that there's no real nutritional value of corn, but that's okay. It's a traditional thing to do. Hey, when we get back from the break, if you'd be kind enough to hold on, we'll take a look at the ERX for you. That's Rich in Orlando. Folks, you too can get in the action. I won't necessarily ask you whether or not you like corn on the cob or not, but you can give us a call at 877-927-6648. We'll be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Money Masters Show, folks. The Dow's up 29 points right now. S&P up 3.5. We're going back out to Orlando to Rich. We're going to take a look at the ERX, which is the 300% bull, direction share bull for the energy sector. So, Rich, tell me what you're doing and how I can help you out here, what I can help you look at.
Well, actually, I'm in the ERX. I was looking at for the oil sector to have a bounce here. And it seemed like it started out doing that. Then we had the pullback, and now with the way things are going, I'm just wondering if this bounce is just going to kind of test the previous move up, and maybe just switch into the ERY, which would be their bearish point of view.
Sure. So let's rip apart the XLE first, then we'll go over and take a look at the ERX ERY. Alrighty. And so what I've got on my screen here, folks, if you're just listening in. And, Rich, I hope you're able to see this. Yeah. I've got the weekly chart for the energy sector. So we're going to start off with the weekly chart and then go down to the daily chart. And one of the other stocks that we're going to pay attention to is ExxonMobil because it's the largest weighting inside the energy sector. Now, inside this weekly chart, we're showing the rising price channel. That price has been traveling in. And then I'm showing the trend line, this little red diagonal line. That trend line is really coming off of the low from July 6, 2012. So we're going back, a good 12, 13 months out here. And that trend line is a very important trend line. It is held. In fact, last week, price came down into that level. Then on Friday, as the market had pushed up, that trend line held. That trend line has been tested a number of times. It was tested first and really established back in November of 2012, in January of 2013, in April of 2013, in June of 2013, and then last week as well. So that's a real important trend line. So also, to answer your question about when to possibly take a look at the ERY, certainly if a close below that trend line, then you'd have a momentum play to the downside for sure on that. So that's one of the things that I would be looking at. That's on the weekly chart, and I would that trend line is very, very key, very, very important. If we go take a look at the...
It looks very, very strong, too.
It is. Yeah, I'll go back to it. It is. I think paying attention to the weekly charts. Unfortunately, they don't finish until till a Friday, but they're really helpful to understand. Just like here, I'll just show you this here. I know it wasn't your question, but what we are taking a look at that being strength. Let me show you weakness, big weakness out here. And that's the XLF. Because look at a similar type of a trend line, which also, now this is a shorter term trend line inside the XLF. This is the one coming off on November 16th out here. But take a look at how that was now busted with conviction this week. It would need a heck of a reversal in order for that to now hold. What that says to me is the XLF wants to hit the red trend line next. That's the one that's coming off of a similar time frame that we're taking a look at the XLE. But let's go back to the XLE, and that's why I think it's always good to also have the weekly charts when you're taking a look at something, going up and down a couple of levels just to get a feel for what the message of the market is. Now, on the daily chart for the energy sector, at this stage here, you're up towards the session high. This thing ought to at least bounce, and make at least a 0.618 retracement from the high to the low, which it's doing right now. That's at 82.34. So I guess your question on the daily chart as you're taking a look at it is it only going to get back to the high of two days ago, right, August 26th?
Right.
Which would be about 82.31. So you got 7.2 million shares, because that actually would be the B point of an A to B equals CD up. So because your A point on this, I would use the low of August 19th. So today's session is going to be very important to you to answer that question, because volume on that is 7.2 million shares. So far today, you've done 2 million shares. You've done good volume in a period of an hour of trading.
First hour, yeah.
So it actually has the potential to take that out. If it does take it out, let's get rid of the retracements. Forget that. Let's just take a look at the A to B equals CD pattern that would be setting up here. Inside the XLE, that would say it's going to go back and revisit the highs.
83.40, 96 there.
Yeah, right in that range. 83.46, 84.13, 83.85, 83.96. Yeah, somewhere right in there. And that's if it crosses. So I think I would watch the energy sector, the XLE, to see if it can close above 82.31 today. And if it does, it looks like it'll have the volume, or at least early on. We'll see, what the volume pattern looks like.
Well, the underlying stocks themselves seem like they really had some bounce this morning, ExxonMobil in particular, but Chevron also.
Yes.
I mean, it looked like they got some juice behind them, not so much volume, but the move was there.
Yes, and so we're going to do the same thing here. So you've picked it up and you've got some wide price spread, most certainly on ExxonMobil. Now on the daily chart on ExxonMobil, what it says, Rich, is it wants to get down and test the bottom. Can you hang on for another break, Rich?
Yeah, sure. Go ahead.
Okay, we're going to come back. Now we're going to tear apart ExxonMobil when we get back from this break. 877-927-6648. Be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow up 32, S&P up 4 right now, Composite up 14. We're going back out to Rich in Orlando, and we're spending a lot of time with Rich this morning. We're pulling apart the energy sector, and it's because he's teaching us a great lesson. He's teaching us a lesson of not just taking a look at the ETF, but understanding what's inside of the ETF structure. And so where we left off was taking a look at ExxonMobil. And Rich, one of the what's nice about that ExxonMobil chart out there, first, I think, is the weekly chart, the daily chart. And the daily chart, because it so clearly shows this 7-point consolidation range here, and the bottom of which is about $85. And I've been waiting for ExxonMobil to pull back to that area as a possible buy because there's a nice 7-point trading range in there. And price never got back to that level. What really seemed to stop it here recently has been the swing points that are down towards the bottom of that consolidation range. It's on the weekly chart. When I switch over to the weekly chart, it really helps us to understand, because can you see that line going across my screen here? That really takes us back to the February 25th level. That candle on February 25th, the opposite of a hammer, it's a shooting star, and that really becomes a resistance area. Now, when you have a reversal candle, you don't really know if it's truly going to be resistance until it gets tested. in the case of ExxonMobil on the weekly chart, it got tested the week of April 29th, but the real test for me, that it was going to be an area of strong support or resistance in this case here, was that big bearish engulfing candle that took place on May 6, 2011. And then each time up, that area held as resistance. And you need to be able to give it a little bit of room to move it up and down. You don't want to use those support and resistance lines as like, to the penny. Just doesn't make, I've found that it doesn't make sense to do that. But we can see it's really acted well as support or resistance. Now, in this case here, last week, ExxonMobil formed a hammer candle. So just like we had over here back in February of 2011, had a shooting star, albeit that is a much larger shooting star, so much longer area of resistance because the bears were able to push the market down. You still had a hammer candle, and hammer candles, hammer candles. So until ExxonMobil closes below that low of last week of 86.39, you've got bullish support out here. Now, this week, tomorrow, if it closes anywhere above this body, you'll have back-to-back bullish candles on the weekly chart for ExxonMobil. And if it can close back above this support area, that also kind of gives more credence to the long trade that you're in inside the energy sector, at least as far as ExxonMobil is concerned. Clearly, you're not just taking a look at just that one stock, but it is the heaviest weighting stock in there, and it's important to pay attention to. So on a weekly chart, you could have back-to-back bullish candles. And all that does is really it gives us an important message of the markets, in my opinion. I think is Chevron, is that the next heaviest weighting inside? Right, that's the next
heaviest weighting, yeah. Correct.
So CVX, if we take a look at CVX, see it too. What CVX has done, CVX is actually, in essence, we could say completed its test of the consolidation range. It's in a 10-point consolidation range. The last time the swing point was down there in that range was on June 24th. That had 6 million shares. When it came down here, did it with only 5.6 million shares on August 21st, and it's the daily that we're looking at. So that came up against the support of a consolidation range, and it's moving higher as well. Now, if we take a look at just small A to B equals CDs, the B point would be, August 26th, 3.7 million shares, and today you've already done 1.8. So it's suggesting that it's forming an A to B equals CD up. And if we take a look at what that pattern is, looks like it's already completed that. So it's got some energy off of the C point here being today. So I don't know what's behind the move. I just know when we take a look at that chart, the energy sector is showing more strength than it is weakness, which is, applause to you for going ahead and taking the long trade on that.
Well, that's kind of a dilemma that I have, is that if this war in Syria does take hold, I would expect that the market as a whole would kind of be hit. And so, but yet the oil companies, I would think, because of the situation, are in a more positive situation. But I'm caught with the dilemma of a rising tide or lowering tide raises all ships. So even if it would be positive for the energy sector, if those stocks aren't going to get tagged with the rest of the market, but it doesn't look like that from what we're talking, from what you're mentioning. It looks like they're actually in a poise to move up.
Yeah, I mean, if we just took the news out of the picture, right, and we just traded what the charts were telling us, and so when you're in that dilemma, one of the easiest things to do is to is to go flat, is to take your profits off of the table at some point, and then especially over holiday weekend, so much could happen. It's kind of like a flip of the coin. During potential wartime and everything that's going on, what is it, a one-day war? What is it that we're even looking at out there? Right. So, from a chart pattern standpoint, I think you've nailed this one here, at least on the short term. And whenever you're in a dilemma, you just take a look at it. So you always have, your options always end up being take your full position off the table, take your principal off the table, and just have profits. Those are really two great positions out there. Or just stay with the trade. Just trade the chart and don't trade the news out there. That's my best advice. I understand that dilemma though totally.
Yeah,
as I think every trader does.
It's but at least it's for a change in a good situation. It's just that I don't want to turn around and lose it. That's the problem.
Yeah. Well, so far those two stocks, CVX and ExxonMobil, two biggest weighting structures inside there, they're not bouncing on light volume. That's for sure.
No, they're on the move. It looks like so.
Yeah.
All right, listen, I appreciate your time, and thank you for the insight.
Hey, my pleasure. Thanks so much for calling. I appreciate it. Okay. Let's check out the currency market out here as well. And I think that's the thing is, folks, when it comes to whatever patterns it is that you're going to trade, whatever patterns it is that you're going to trade, and what I mean by that is sometimes people trade fundamentals out there, and that's a beautiful thing. But if you're going to trade technical patterns out here, it's best to just look at the chart. It's best to really just look at the chart and tune out the rest of the news, because what's going to happen inside the chart is the chart is going to consume the news and it's going to interpret it however it wants to, and you just want to be able to trade that chart pattern out there. So that's my best advice, because what happens is that almost all the time, when we pull up a chart, I don't remember what happened on certain dates or what have you. We just go and take a look at the chart patterns. We take a look at wide-ranging bars. Take a look at this Euro-Japanese yen chart here, and you come back. This is a daily chart. Take a look at this trading session right here from April the 4th, 2013. Now, pretty much there's chances are the Bank of Japan announced something, because take a look at that wide-ranging bar. But forget about whether they did or they didn't. Does it really matter? I mean, a wide-ranging bar like that, does that tell you that you're off of a bottom? I mean, it most certainly does. In this case here, that wide-ranging bar did what? It turned the pattern that we were looking at into, in essence, a 1.618 butterfly pattern that ended up completing out here on May 22nd, 2013. So the candlesticks, they'll speak to you. The chart that you're trading will consume that information that is out there, and just trade the patterns that are there. That's why for my clients, I spend time taking a look at different correlations in the marketplace, and yesterday gave us several after the move down that I could outline for them to say, okay, here's where we should see a pause button, or we should see a bounce in the market. And it's the bounce in the market that we want to go ahead and short versus taking a shorter-term long position in here. And that's because in the Qs yesterday, that island reversal top, very bearish. Now, that island reversal top gets taken out in the NDX and in the Qs because they have been the strength. Folks, that tells us a big, huge thing, because we learned as much from failure. We learn more from failure, quite frankly, than we do from success. And it's the same way in chart pattern technology, charting patterns that are out there. And if the strongest bearish reversal signal fails, boy, that tells us that there is a huge, strong trend in place. Whether the market knows about tapering, non-tapering, whatever, it doesn't really matter. Just pay attention to what the chart patterns are telling you. Does it work all the time? No, nothing works all the time. But I tell you what, it works really, really, really well. Well, if you take a look at the Euro-Japanese yen, here, it has formed the C, potentially it has formed the C point of an A to B equals CD up. If that's the case, then what we're likely to see is we are really likely to see that island reversal get taken out. Now, there's a big reversal signal that we did see here, so it's just a pause button today. But what price did do, as it often does, and this is why you want to have these tools on your system, is you take a look at the low from August the 12th when that Gartley buy pattern, a beautiful Gartley buy pattern on this currency pair. He had a 0.618 retracement, a 1.618 expansion on it. I mean, it's a beautiful, it's a chart, it's a textbook pattern for a Gartley buy. And then it makes 100% move of a move. But what I mean by that, it gets all the way back to the original swing point high back here in July 24, 2013. When a market makes 100% move of a move, it's going to do something different. Well, it really did that for 2 days and was telling us that it was tired with those small-bodied candles, but it was also signaling to us at that stage that it wanted higher price. Well, that all changed yesterday with a wide-ranging bar coming down to the with the wide-ranging bar moving down. But take a look at where price stopped. The 0.618 retracement number is 129.66, and what it got down to was 129.65. I mean, come on, folks. I cannot tell you how this works. I cannot tell you how Leonardo Fibonacci was so smart back in the 1500s to have figured this out, or to I mean, but it, how does that work? But yet it works. time and time and time and time and time again. And so we've seen now here where the elevator, the 0.618 retracement level, the 129.66 area inside the euro yen, that's now held as a pause button, not a reversal candle at all. It could be forming an A to B equals C to up. We really won't know until we see how it actually tackles this candle here. Now, that's a daily chart, which is the reason why we want to take a look at shorter-term charts. You know, yesterday during the show, I had a caller, I apologize because I don't remember the individual's name, but he was calling about the U.S. dollar, Japanese yen, and I had about 15 seconds to give him my advice on what the U.S. dollar Japanese yen was going to do. And at that stage of the call, let's see, here's the 11 o'clock bar right here, this little wide-ranging bar. So we're on the air. We're getting ready to close out the 11 o'clock bar. We can see that price breaks through the 0.786 level. That bar was telling me that there was selling pressure here. And what I said to him is I said, what's going to happen is the U.S. dollar Japanese yen should get down to the 96.90 level, find some good support, and bounce off of that. Well, folks, look what happened. In the time frame at 8 o'clock last night, it hit that 96.90 level, closed out at a 96.87. And then what did it do? Formed a bullish engulfing candle right there. And then what happened? Price pulled back at the midnight session, and you formed a hammer candle. So you form a hammer candle. Again, it's a 30-minute chart, but you got to play that chart pattern, and now you've got price running up to the 200 period exponential moving average. May find some pretty decent resistance as it moves up there, because you can also see on the 30-minute chart as it's moving into that area, what's it doing? It's getting into the overbought condition. That's on the U.S. dollar Japanese yen. And that was nothing more than utilizing the tools of understanding 100% move of a move, and the odds favor that's going to be a spot where you're going to see price hold. It's also utilizing the tools of knowing that the market was truly in that extreme oversold condition. So you use that as an additional tool to help you with your trading, and it works this way on every chart. So the trading currency pairs is really not that foreign. It's not that difficult, because what you want to do is you just want to trade the chart patterns. Just trade the chart patterns. Use the news as kind of just to keep you caught up to speed as to what's going on out there. Maybe say, okay, that's the reason for this or for that or what have you. So there's just simply chart patterns that you can trade out there. If we go take a look at, and that's why I can't implore enough right now that if you are inside any of the mining equities out here, that what you got yesterday was a huge signal. A huge signal. And that signal was, you know what? Make sure that you really tighten your stops, or if you've given back some of your profits, make sure you tighten your stops now, because you got a key reversal session. And in yesterday's case, we should not have seen that, because the GDX, that tracks what gold is doing. And we had gold moving higher, and we had all of the gold, not all of them, but we had most of the mining equities retreat. And so that also tells me that there was a lot of selling, that they were throwing out everything yesterday, because the mining equities have been well off the bottom, have had huge gains out there, and that what people were selling was they were basically, the mining equities got caught up inside the selling frenzy that we saw yesterday. But that is still very important for us to be paying attention to. Today's move up, nothing more than a pause button. That's a key reversal session right here, and we're likely to see many of those equities pull back, and hopefully many of those equities pull back with light volume to let us in for now a third opportunity to go ahead and play this market to the upside, because I do not believe that the move is over, but boy, the retracement here could be pretty significant inside some of these equities. So we're just playing the chart patterns out here, and this should not have happened yesterday. This candle pattern inside, and it's not like it just happened in the GDX. I mean, you can go across the board and start taking a look at all the different gold and silver mining equities that are out there, and it was just like I had to tap my screen, I had to restart my screen just to make sure that I was getting the proper live feed data out there. In any event, let's take a quick peek in here at the 30-minute chart for the ES Mini here right now, traveling up and hitting that 50-day exponential moving average, or the 50 period, which in this case here is a 1634-ish range. It's been up as high as 1633.75. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up 33 points right now. S&P up 5, and I think it was last week or the week before. One of my newsletter subscribers, clients, who's really getting back into learning technical trading, sends me emails, asking me questions. I love that. And but the last time we chatted by email, I should say, the question that he posed was, he said, what was the most important lesson? I think it was something like, what was the most important lesson that I had learned when it came to technical trading out there? And my response was, and the reason I'm bringing this up is because Oda Nobunaga in the den, he actually hit on it, and it was really my response out there, which was the most important lesson that I learned. I told him it was really simple. It was only one lesson, and that was this: to trade what you see, not what you think. And it is a great title of a book, Larry Pesvento's book out there. And I tell you, folks, that is the single biggest, best, most important lesson that I have ever learned. It took it cost a lot of money to learn that lesson. It took a lot of time to learn that lesson. But I don't mind shortchanging your time and I would like you to learn that lesson as much as possible. Truly trade what it is that you see. Whatever trade you're in, pay attention to that stock chart. Utilize whatever technical skills it is that you do have. Know that each of us, that means each of us, every single one of us on a daily basis is always learning more. If we're willing to learn more, we're willing to consume information because, it's about feeding our mind. And all of a sudden, sometimes, just like, there's going to be light bulbs that will go off because, trust me, when I first took a look at a stock chart, and I looked at them for years in the back of newspapers, maybe like you did as well, and I was like, it means absolutely nothing to me. I mean, absolutely nothing. But now that is no longer the case, and you can teach yourself, or we can teach you, how to do that as well. But the most important lesson that I ever learned, and happens to be, a great title of a great book, trade what you see, not what you think. And if you do that, you will set yourself free, and you will make better trades. I promise you will make better trades out there. In the case of the ES Mini, right now it's making that 100% move of an area that's acted as a resistance level. Last time it was up here was at 4 o'clock this morning. That's at the 1634 level. I suspect that this area will get taken out, and it'll get taken out, and price should move up towards 1643, which is nothing more than the 0.618 retracement of the last move down. That was a move down that came in right around 3:30 in the afternoon. That was when the news went ahead and consumed the news from John Kerry. Took a little while before it to consume it, to say, you know what, war, that's not good for the stock market. Time to go ahead and sell off. That's, in fact, what it did. We had a big move down because you went from the 1650 to 1624 level. So a nice big 30-point move. All that we're seeing now, in my opinion, is just a normal bounce. We saw enough signals yesterday. There were enough technical indicator signals as the market closed yesterday that, in fact, said that we should see some kind of a bounce. I'm grateful that bounce is underway here right now, because that's a bounce that I would like to sell. So the key is going to be pay attention. Put that relative strength, relative weakness indicator, use a 14 period, put that on the screen, make that one of your tools, make that one of your best friends. Or if you use the stochastics, then just use that. You don't need them both, because they both will do the same thing. They both measure momentum. And so just use the one that works best for you. But if you don't use one or the other, go ahead and put the RSI up there, use that 14 period, and see what happens as it's getting up towards that overbought level into the 70. It may not make the 1643, but that's the potential range for the rest of the day. So stay tuned, folks. Basil Chapman is up next. Remember, do not be a pioneer of your past. Instead, don't be a prisoner of your past. Be a pioneer of your future. Have a great Wednesday, folks. I look forward to seeing you in the morning. Take care now.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.